Most investors never realize this until it's too late. It's not the market that hurts their returns. It's their own behavior. They buy too late, panic too early, and bounce in between strategies. Like it's a game of some sort of financial musical chairs. But there is one investment that quietly protects people from themselves. A simple, boring ETF that keeps winning while everyone else overthinks everything. And that ETF is VFV, the Vanguard's S&P 500 fund. And today, I'm gonna show you why this ETF works, why it keeps working, and why it continues to outperform the average investor, not because it's flashy, but because it's so simple. So let's break down the strategy that just works. If you clicked on this video, it's probably because you want clarity, not as much hype. You want to know if VFV is still one of the smartest long-term investments for Canadians who want exposure to the US market, without the headaches of picking stocks, market timing, or complicated and often boring strategies. Instead of giving you a dry list of features, I'm going to guide you through the story of how VFV behaves during corrections, recoveries, interest rate cycles, and those unexpected global curveballs that really test every single investor's discipline. Trust me. By the end, you'll know exactly why VFV remains a cornerstone investment for people who want a strategy they can trust to build wealth steadily over decades. So what is VFV? VFV tracks S&P 500, the index built around 500 of the largest and most influential American companies. These are the companies building the tech you use, the systems you rely on, and the products you buy almost every day. For Canadians, what makes VFV even more compelling is that it's unhedged, meaning it captures both the growth of the US market and the movement of the US dollar against the Canadian dollar. Sometimes the currency helps, sometimes it doesn't, but historically, it's often added a little boost just when global markets get shaky. So VFV is very simple, very broad, and it taps into one of the strongest, if not the strongest, economic engines on earth, without requiring you to pick winners. Again, there's no stock picking. So why this strategy works? It's very simple. To understand why VFV continues delivering over the long term, think back to one of those moments when the market suddenly plunges and everyone panics. Me being one of them. Headlines explode, YouTube thumbnails turn bright red with scary charts. In the background, people start predicting the end of capitalism or the end of America. But here's what happened every single time. Let's be honest. The S&P 500 recovered, and VFV investors who simply stayed put, even if their stomachs flipped during the ride, again me being one of them, ended up coming out way ahead. And that's a real point. VFV rewards people who stay consistent. You don't need to be a genius or a stock market guru. You just need willingness to hold on when others don't. Okay, what about this ETF's performance? Well, historically, the S&P 500 has produced very strong long-term results through good years, bad years, and everything in between. Not because markets go up smoothly, they absolutely do not, but because the index constantly evolves. When companies fail, they drop out. When new winners emerge, they're added in. The index automatically upgrades itself. VFV simply mirrors the natural cycle of innovation and competition. And over long-term periods, the cycle has been incredibly powerful. Now let's look at the fees. With a fee of 0.09%, VFV is cheaper than most people's coffee habits. Fees matter a lot to me because every dollar you don't lose to management fees is a dollar that can compound for year after year after year, for decades. And compounding is a magic, but it sure feels like it when you zoom out far enough. Again, think decades. And this is why cost-effective ETFs like VFV remain long-term investors' favorites. They let your money do the work, not someone else. I've mentioned the currency factor briefly earlier, but let's look into it more. Because VFV is unhedged, your returns shift with the US dollar. When global uncertainty rises, investors around the world often, not always, but very often move towards US dollar for safety. During those times, Canadians holding VFV can benefit from the market recovery and the currency movement, the US dollar going up. It's not guaranteed, of course, but again, over the long run, it has been an underrated advantage that people always miss. Remember, currency. But, of course, there's a risk. Every investment comes with a risk, and VFV is no exception. You're tied to the performance of the US economy. You're exposed to market volatility, tech-heavy swings, and currency fluctuation. The strategy is very simple, but it's not invincible. But that's where your belief matters. Do you trust that American companies will continue innovating, competing, and expanding? If so, VFV becomes a long-term ally, not a short-term gamble. If you don't, then maybe you should look into something like XEQT to get global coverage. So who is VFV for? I would say VFV is excellent for investors who want a long-term growth strategy, hands-off simplicity, as well as exposure to US innovation, low fees, diversification without stock picking, this kind of stuff. It's less ideal for people who want high monthly dividends or low volatility. If you're Canadian, it's also obviously all US stocks. VFV is a long-term builder, not a quick cash machine. This is something you have to keep in mind. It's for long-term, decades in the future. So here's a simple strategy for you. This is the part nobody wants to hear because it isn't so flashy. The single most effective strategy with VFV is simply staying investing and continuing to invest. No guessing, no gambling, no bouncing between different fads, whatever is hot right now, whatever is pumping. Just buying consistently over time, over the years, holding during the rough patches, and letting the US economy do what it has been doing for a very long time, reinventing itself. Long-term investors don't win by being geniuses. They win simply by being patient. And this is something you should try to do. I sure am trying. So, should you invest in VFV? I would say if you want growth, simplicity, exposure to some of the most dominant companies in the world, this ETF would be one of the strongest, most reliable options for you. It doesn't need to be exciting. You can put a couple dollars away and gamble with them, but this ETF needs to be effective. And that's exactly why it continues to work. I hope it makes sense. Anyways, thanks for watching. If you made it all the way till the end, first of all, respect. Thank you so much. Second, if you enjoyed this or learned something new, hit that like and subscribe buttons. It genuinely helps YouTube realize that my videos are at least somewhat watchable, which is honestly all I'm asking for at this point. Drop a like, leave a comment, and let me know what ETF or stock you want me to talk about in the next video. Thank you for watching. See you in the next one. Take care.